All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is, Thursday, July 20th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Let's go ahead and get started around the horn. Dow futures down about 10 points. Nasdaq down about 0.83% on the future side, down 133 points. The bulk of that is Netflix and Tesla after earnings. S&P 500 down about 0.32%. The dollar index is up. Again, we talked about that dead cat bounce in the dollar that we were expecting. We're at 100.47. The VIX is up 1.89% at 1402. Crude oil is at 75.78 a barrel. Gasoline futures $2.70, down 0.41%. Gold futures pulling back with the dollar going higher, 1976 an ounce. 25.30 for silver futures, down 0.34%. Copper, we have up 1.72%, $3.87. And we'll go to Forex land. Euro dollar down 21 pips, 111.81. Dollar yen up 19 pips, 139.85. Pound dollar, 128.72, down 64 pips. And Bitcoin is up 0.63% with Ethereum up 0.34% this morning. Glad to have you on board. Good morning from Apple headquarters. Good morning. Good morning. Let's go ahead and get started. We'll go with the earnings. So again, the earnings are posted already in our Discord, on our threads, on Instagram, and on Twitter. So if you want to go and take a look at the numbers, by all means, go for it. 278. So now we are right here. Remember, this is the convergence of these lines. You want to sound extra smart. Till 278, we're right below there. In terms of what the trend line reverts back down to, you need to wait for 270.28 in order to go short. Why do I say that? That is your 20-day moving average. So let me get out of this here, this 262 level. I don't need that. I need the 270 level. We'll cancel that alert. And now you see that purple line. That's your 20-day moving average. If we get below that, again, that gets back down below the trend line. And below this resistance, again, we can go ahead and short. And then we also have one level of support here around 250 to 248. And you have a gap to fill at 236. They had good numbers. Not like Tesla had bad numbers at the end of the day. But if we go ahead and kind of expand a bit in terms of Tesla. We had the last quarter. We just reported, so we go 3 months before. We could just do that. So that's really what, April? April, we went from the highs of 207, we'll say we'll call it $200 a share, to 291. So about 45% increase in terms of the value of the stock on Tesla in that quarter or in that 3-month period. So getting a little blip here of 291 to 277 isn't exactly horrible. It's actually nice to see, unless you had calls, which wouldn't work. And we talked about don't play earnings. And again, this is not exactly a huge move either. I mean, what? We got as high as 299. 300 seems to be that resistance. Fine. We'll use that moving forward. And then you have 278 now. Not the worst thing in the world. And again, if you've been trading Tesla like I have for years, we're used to volatility. This is nothing in terms of volatility on Tesla. Now, again, this could absolutely tank later, or this could absolutely soar later. It just depends on the open. We have seen stocks like Palantir be up 3% pre-market and then automatically tank in the morning. Goldman Sachs was up in the morning, tanks right at the open, and then bounces again. So volatility and choppiness happen. But in regards to Tesla, has anything really changed? No. And if you ask me what level would I want to buy some more, it's right around this gap fill, right around 240. So if the market wants to give me $240 as an offer for more shares of Tesla, yes, I am a buyer of Tesla at that gap fill. Why? Because it's still above this triangle and it's still a breakout. All we're doing is filling some technical gaps. Tesla hasn't really changed their business model. Yes, the Cybertruck is coming out. We'll see when that happens. But for the most part, I think a lot of this is just a pullback on a very high bar of expectations correlated to the stock move in the past 3 months. 45%? Yeah, I'd assume if you're a bull, you'd expect a lot in terms of Tesla. You would need some really amazing numbers. And Tesla, I think, had their most number of deliveries, but the market is pretty fickle right now. They're we need a reason to buy, like we talked about. We need a reason to buy. We have every reason in the world to sell. When you're up 46%, 100%, our Carvana is up 1,000% or something wild. Again, that's an excuse to sell, taking profits. But excuse to buy, that's the tough part. Netflix. So Netflix has been absolutely clean sticking into this trend line or this channel here, really other than March to June to May. So about 2 months. We got back in, it's been going ahead and soaring. We did pull back, but we still have a gap to fill at 505.93. So we are now at 450, let's just call it. And 450, not terrible. I would actually hoping that we retest and hold that 50% retrace line on Netflix right at 431. And if we were going to tag that and we stayed there, I probably would buy some calls, especially with that change in premium. Now that that stock has fallen due to after hours or pre-market now. We still have a gap to fill at 505.93. I still think it gets there. Netflix had a great subscription number, but again, we need a reason to buy. We have all the reasons in the world to sell. Again, well, how much have we moved in the past 3 months? April, we were at 322. Now we're at 477 as of yesterday's close. So again, in my opinion, I don't think it was an indictment of the quarter. I think it was more of an indictment where, if you want me to keep buying these things, or shares, I'm going to need a lot more on this quarter. I'm going to need some real hyper growth. Now, valuations are not extremely stretched, but positioning is. So again, be prepared when people take profits. It's completely natural and completely normal. I mean, doesn't mean the stock is worthless. Doesn't mean it's over. Doesn't mean the world's over. It's just that, hey, when you made 400%, 200%, 100% in your stocks, and you're someone that doesn't have this in a retirement account or a long-term portfolio, hey man, maybe you take that money and you go ahead and go on vacation. Maybe you take that money and you go ahead and buy yourself a nice watch. Maybe you take that money and start saving for a down payment for your house or redo your house. Again, there's so many reasons to sell and very difficult now to pitch to buy. Because if you're up so much, what exactly are we pitching here? That you're gonna make more? Great, that's nice. You can always make more. Or you can actually realize your gains, take it, count your money, and move on. So I think that's what you're going to get in terms of earnings, at least with these two stocks. And again, for all we know, Netflix plays this 430 bounce off that 50% retrace. We'll target 500. Why not? We'll see what Netflix does. Any earnings you're excited about coming up? Not for this week. For next week, yeah, Microsoft, Meta, and those names. But for this week, no. Next week is the gauntlet, guys. We have FOMC and more earnings, so get ready. It's going to be a fun one. Mara, let's go and take a look at this one. I had a DM the other day on Discord server asking me about Mara. My alert to break, I had it at an 1827, but I went ahead and moved it at this wick from the 17th, 1868. But you can see we've been holding up a very, very nice, clean uptrend. And again, we know that this is more Bitcoin than anything else. Look at the hourly in terms of that red dotted line. So again, we still have a little more room to go. I think Mara does go to 20. I don't think it goes this week. But guys, we still have a gap to fill here at 2602. Once we break 20, that's where you're probably going to go. So again, if you're someone that looks for a little more speculation in terms of your portfolio or trading, I mean, Mara, we've done this. We've done this with Palantir. We did trade Carvana too. Not yesterday, though. But again, you can see a nice breakout. Let's get above 1868. If we break above that, we'll target the 19s or the 20s, depending on the volume. And then we're going to keep that road higher. As long as the stock holds up the trend line, holds out the breakout, we're going to get to 2602 on Mara. And I'd rather trade that because it's something I've been trading for a while. But nothing wrong with Coinbase either. Coinbase needs to break 116.16, and then you have a gap to fill at 176. Again, I'm just going over the crypto stuff. Riot, you need to get above, well, Riot, if you get above 20, let's say 20 and a quarter, 2025. We get above that, we have the 38.2 retrace fib line is 2260. And again, that's the resistance that we've had since April 2022. That would be a nice target. So, I have no issue trading Riot or Coin. I just prefer Mara because I've been trading it for so long. Do you like Disney more than Netflix? Here's the difference between Disney and Netflix. Disney has theme parks and has legacy studios, as we know. But again, that is more cost. Netflix does not have the same number of employees or unions the way a Disney does. So again, as we know with stocks, it's all about profitability, right? Disney's not a bad company. I think Disney's great. I just think that Disney, my opinion, again, there's no rumor out there, that it's going to get bought out. It's going to get to the point that they're just going to be too cheap to ignore. In my opinion, I think, Tim Cook, hear me out, Apple should buy Disney. Apple has too much money. Disney needs more money. If you integrate Apple with the Disney parks or the Disney studios, Apple TV, and you integrate that, you're talking about a media empire that has cash, river of cash. And then you start talking about integration with iPhones and software. Oof, different story. I love Disney. I own Disney. Again, I still think we get to that gap fill of 100. Get me above 90 or 95. Actually, get me above 95. I will target the 100 calls. But in terms of buying the stock here, we do have earnings coming up. Let's give Disney one more shot. Let's see what they do in terms of their earnings call, right? And if they do well, we'll take a look. But right here, not a bad place to buy. Maybe if we get below 84, that's where my alert is, to go ahead and scoop more shares. Remember, Meta was hated last year. Netflix was hated last year. Carvana was hated last year. ARKK was hated last year. Tesla was hated last year. Nvidia was hated. I mean, name it. And they were all hated. So that's where you start looking for, not the names that have been soaring. Yeah, we know Nvidia is going great. But now you're looking for the names that everyone hates. You know, a lot of people are not talking about energy, right? Energy and healthcare. Now everyone hates it. Maybe that's an opportunity out there to buy stocks on the cheap so you can sell at the highs. That's really investing, guys. Buy it on lows, buy it cheap to sell it high. That's all. Do you think it's a good time to buy Disney for long? I have an alert at 84. And again, the only reason I'm not running out to buy Disney is because we want to see their quarter. Let's see. Let's see their guidance. We don't know. So, I mean, that's all we have to wait for. But in terms of technicals, again, a good price, 84 below is great. I wouldn't hate that. Thoughts on Charles Schwab. And again, another one. Remember, this was a hated name. Banks, guys, banks, energy, value. Those names no one is talking about. Everyone's talking about NVIDIA. So in terms of Schwab, you need to get above 67.38. You're at 65.69 now. Do you have a gap to fill at 74.75? As long as you stay above this red line, the 200-day, you're going to fill this gap fill to 75. So a gain of around $8 a share. Not terrible. But again, you're owning Schwab for the dividend for the most part. You're not exactly expecting hyper growth. JPM, to me, is still the class, the leader in terms of the banks, them and Goldman. And Goldman, again, didn't have the best quarter, but I did trade it yesterday with the team. So we're looking at a gap to fill right around 168 on JPM. If we're looking for an entry to trade it, let's see if we can get above 156 and then see what's around that 160 level. Again, it's a clean breakout, guys. Let's see how far we can go higher. I do have a lot of alerts on JPM, so I'm just going to go ahead and just move this one here to this level of previous resistance, which is now support. So again, if we retest this here around 145, not a bad place to scoop up some JPM. Good time to buy Target. I have an alert below 120, 130, 132. Again, if you just want to save a couple of bucks or you want to spend a couple of bucks, fine. But again, 120 is the level I have. And again, everyone wants to hate Target. No problem. Hate it all you want. But guess what? Target ain't going anywhere in my opinion. My wife spends too much money at Target. So at least economically speaking, I think Target's going to be fine. So 120 is my target level. No pun intended. We're kind of hovering around 132. If we get above 140, then it gets interesting. Then I may have to eat that and just go ahead and add some target 180, excuse me. So again, we're kind of in that zone between 130 and 140. I'm kind of hoping, cross my fingers, maybe their earnings or what have you is that it gets you down to 120. Maybe there's some kind of headlines. People are upset at Target again, or people are upset at companies again for whatever reason, political or not. Again, this is beneficial. Guys, a Rolex is still worth a Rolex, whether, the guy sells it for 500, a guy sells it for 5,000 or 50,000. It's still the brand. Again, you're looking at really the brand itself. Do you really think Target is going to go away in 5 years? Probably not. Things pass. I remember when Target there was a big issue regarding masks. That was 3 years ago. Remember the mask? You have to wear a mask, don't wear a mask. People forget this stuff. People are very fickle. So I think Target is definitely a good place to buy. Again, but you have to be long term because there's a gap fill around 220 or so. And that would be a nice trade if you get from 120 to 220, am I right? Hell, if ARKK and Carvana could soar, literally a car vending machine can soar, I'm pretty sure Target, with their money and their resources and their storefronts and their management, they're going to be fine. Is VZ or T a buy? So Chad is really looking for the discount bundle, and I like that thinking. And I thought about this the other day as well. Again, I'm not interested in the names that have already soared. I'll trade that all day. But when it comes to the deals, we want to find some really good deals. So you can see Verizon off the face of the earth. Lucky for me, back in 2018, I want to get the year right, I had a position in VZ. God, I don't remember how many shares. It was in my IRA. And I was collecting a nice yield, about 4.5% or so at the time. I sold it all. I believe that was at 60 or 70. I think it was at 60 a share. It's been hovering around there. I got out of those. That was years ago. And I put it all into Apple. Good move. But let's take a look at Verizon. And you can see $25 a share. Could that happen? Absolutely. $30 a share. Why not? Verizon, really the issue with telecoms, guys, is debt. That's what happens when they try to accumulate too much. And T-Mobile throwing the boat at them because they don't have to worry about a dividend the way Verizon and AT&T do, that's really hurting them. I think the next shoe to fall in terms for us of Verizon to get down to a $30 a share or maybe a $25 a share is if they cut the dividend. Then there's really no point of owning it other than really looking forward thinking on Verizon. And I don't think Verizon is going to go anywhere. I don't think AT&T is going to go anywhere. I still think AT&T over the long term will be fine. I remember a time and place back in 2019 when XOM was trading around, or in the 2020 area, 2020 time due to COVID, we got to around $31 a share on XOM. Everyone thought, what? What, you think ExxonMobil is going to go away? People are not going to put gas anymore? Come on. Is everyone going to get rid of their cell phones? No. AT&T, long term. Yes, it's going to be a grind to own this thing. But again, if it's $11 a share in AT&T, I'm scooping it up. But again, the only other shoe to drop, and I think I can get a better price, again, from $14.59 to around 11, hey man, that's about 30% or so more in price. So again, we want to target a good price where we feel comfortable to own the stock. Where we say, hey man, I bought some AT&T at $10 a share. All right, you know what? Let's see what happens. And again, AT&T is a legacy business. Do you believe that we'll go out of business because of some lead cabling on the Wall Street Journal? Fine. If that's what you think, don't buy some. And again, I don't own AT&T, so don't worry. I don't have any skin in the game here. But I definitely would like to buy some. If you're taking a look at AT&T on the weekly, there is some level of support here. And the only reason I'm not going out to buy some is waiting for that shoe to drop again, guys. If they cut the dividend or they offer no dividend. The last time a company did that was Disney, and we tanked immediately. So I like AT&T, Verizon, Disney, Target, the names that everyone hates, or energy that are pulling back. I want them. I want healthcare. I'm looking at some deals. Again, guys, we don't need to look at NVIDIA anymore. Microsoft, yes, we know they're soaring. I mean, time to look at those names were last year. So again, we're always looking for the cheap stuff. Not cheap, but we're looking at names that maybe the value has changed in terms of perception to others, but our perception, knowing what we know in terms of markets, how long bear markets take, bull markets, all rotation, people get greedy, people get fearful. The more you research, the more you'll realize that sometimes people's perceptions are just plain wrong. And that's really good trading opportunities, really. All right, so talked about a lot this morning. Let's see what else we got. Carvana, speaking of that, that was up yesterday, too volatile. There was some unusual options I saw on CNBC that were talking about Carvana on Fast Money. You do have a level of support at 54.23. And again, guys, we've been saying this for months. It is the meme names. Again, that's all it is. It's just the meme names. So we want to look at the high betas. So we want to see if this level of support holds. If it does, then fine. We could see if we could trade it. But as for now, right now, I'm not really in a rush to do anything. Next week is really where the meat and potatoes are going to be, in terms of earnings and the FOMC. We're having a great week this week. Let's look at it. I do have some Robinhood calls open, but that's for next week. Other than that, Caterpillar, Palantir, Apple, we had it, got as high as 200%. That was a great action on Apple. You can see it. We had the 195 calls, and then this was the AI news, pulled back. I still think Apple, in terms of long, is still good. Apple doesn't report earnings till August. So if we go ahead and draw a couple lines, you can see that if we just get back to that breakout of around, I don't know, 194.50. You know what, just to be safe, let's just call it, not to be safe, but to be a little more sure. Let's do 195 as an alert. If we break out of 195, guess where we can go? 198. We can get there. It's not like we can't. And there isn't exactly anything, bearish about Apple here. Not even close. So Apple, with this pullback, maybe give us an opportunity to break above 195 and play the 198s, the 200 calls, depending on volume, what stands out, the price, yada yada. How useful is the 100-day EMA? I use the simple moving average, but the 100-day really, just like anything else, just gives you a set of data based on the longer time frame. What's better and what's not, it really depends on what you're looking for. If you're talking about long-term trends, I prefer 200-day, but with the 100-day, that's fine too. The way I see it, whatever the stock is closer to, I'm going to pay attention. That's really it. So think of it that way, Joey. Whatever the stock is closer to, in terms of the moving average, that's probably the moving average you're going to use the most. You still use SMA, no EMA, just SMA, simple moving average. That's it. I am a simple man, so a simple moving average for me. All right, guys, we're about 5 minutes away from the open. I'm going to go get back with the Discord team, and we will see you guys tomorrow for the next morning note. Tomorrow is Friday. I will also post the recap of the week, as you saw. So far, 5 for 5 this week. Another undefeated week in the books. Our current streak in terms of options trading is 16 winning trades in a row. That's with entries and exits. Can we make it to 17 today? We will see. Have a great rest of your day. Cheers.